Hey everybody, Greg here from Master Trader. I'm the one on the left there. I thought I'd build on our previous MT Live about tells and show you a little bit more about that and how we attempt to find them. Each Wednesday we do an MT Live, and we also do pre-market reviews every day at 9 o'clock. We do those on YouTube, we do them on Facebook, they're on Twitter, live being streamed. You can watch them in any one of those locations. But the YouTube one is youtube.com/C/Master Trader. And we cover different topics, whether it's options, whether it's candlestick analysis, trends, pivots, multiple time frames. So let's take a look. Let's start with an understanding of how we approach reading charts, technical analysis. I can tell you it's not based on indicators and Elliott wave or anything esoteric. It's price patterns. Price patterns, as it says, pictures of others' beliefs and expectations created with money. And I'll show you a few examples of that, and you'll get it pretty easily. And so I say, what are creating your beliefs? Indicators? Something other than the price action? I mean, you eventually get to the price action if you're looking at indicators, but the theory is the indicators are going to lead or tell you what to do. But in reality, they're always behind, and you can see everything just by watching the price patterns. So they tell us what other traders have done. And when they tell us what they've done, they also tell us what their expectations are. And what I'm going to share with you today is part of failed expectations. It's great when this pattern's set up and they suggest they're going to either go up or down. If you're into credit spreads, okay, we don't care how much it doesn't go up or down. Pretty much can be stagnant, or if you're doing a put spread, it goes up, and vice versa if you're doing a call spread that you want it to go down. So those candles provide us those expectations on an ongoing basis. And I call it candle language because as you read them bar by bar, they tell us what happened. Is it following through on what it suggested was going to happen, or was there an abrupt reversal that could add to our analysis? So when we look at candles, we're always looking to simplify. All of this on the left there, what they call candlestick hype, these different names, to us they're irrelevant. Prices are either going up or down or reversing, momentum slowing or increasing. So depending on the time frame we're looking at, if we compress it, so in this example, you got one candle. If we expand it, two candles, expand it further, three candles. In all of them, it went down and it went up. So understanding that, we don't really care what you want to call it. They all went down. They all went back up. And depending on the trend, it could be suggesting it's going to go higher. It could be a failure to go lower. We'll take a look at that. Right, expanding candles. Are they wide range bars? How do we define that? Well, they're just big bars compared to what preceded it. Or narrow bars. Right? Narrow bars can come after a wide range bar. They can become before. We have to put that together again, bar by bar analysis. Topping tails, they come in wide bars or narrow ones. You can see in the middle there, they got some topping tails and bottoming tails that are narrow. And over here, the bigger ones, these range expansion bars display more emotion, more, in effect, of the topping tail that sellers took control. Bottoming tail bars, buyers took control. So if it's a bigger bar, we relate that to more emotion being related to that. And again, we got to put that in the context of a bigger pattern. And as it says, where do they happen? What's the location? Now, when we talk about tells, some of the things we're looking for are these event bars. And what are they telling us? Well, in the top row, there was an attempt to go lower in all of them. So the one on the upper left there was a red bar breaking down under the low of the wider range bar and the inside bar, and then it springs right back up again. Again, how are we going to find these? The second one from the left, bottoming tail bar, it broke below the prior 2 bars lows, so we want to see it break 1 or 2 bars lows and then come right back up again. Again, different variations. They all went down and they came up. On the top, second from the right, it broke down with a wider bar And on the next bar, it gapped up and it closed above the highs. An immediate reversal, kind of a breakdown failure. And the one on the right, the upper right there, was a wide range bar, an inside bar, and then it breaks the lows and it springs right back up again. So with all of these, what it tells us is that traders, institutions were lurking below. They saw the drop and they bought it, and they were taking the offer and driving it back up again. So there was a shocking type of reversal. And the bottom ones are just the opposite. And you can see lower left, it moved up, an abrupt reversal back down. Then the topping tail bar, they took out the highs and back down again. A breakout, you can see the 3 bars there, it breaks out and springs right back down again. And then the wide range bar, the inside bar, and the topping tail bar. Again, with all of these, they went in one direction and abruptly reversed in the other direction. So let's take a look at some scans. Now, how are we going to find these? Well, I use this layout, what I call a top-down approach. Right? The broader markets on the upper left here, S&P 500, of course, NASDAQ 100, semiconductors, the transports, the industrials, the Russell. And as we click any of these, it'll load the stocks in this minder down here, where you can see I've got different criteria to look for within them. And then S&P sectors moving out to more sectors, right, from the big ones, right, going down to looking for more defined setups. So focused on technology, real estate, we've got discretionary, utilities, communications, and so on. As we click any of these, we can then load the stocks that are in there. We can sort this by weekly percent change or change on the day to see what did well that day or not. We can look for wide range bars, what's doing well on the year, relative strength. And then we can go even further out to more defined ETFs. So this is very broad. This defines it a little narrower. This one defines it even more so. And these are, as you can see, 142 different industry groups. Over here I've got 37 ETFs, and this is just the 12 S&P sectors. So as we go through that, and we can just click on any of these, right? So I've loaded the transportation index in there. Well, let's see if we find something that maybe broke out or it was higher. Okay, what is these here? These are losses of the 50 MA. So this doesn't look exactly like the slide I showed you, but we have to put some common sense. If I define any of these scans too exact, we're likely to miss a lot of things. So we're going to have to do a little manual work to click on the symbols and see what they look like. What we have here in this Landstar was that it was above the 50 MA in the last few days, and now it broke underneath it. Now, it's a bottoming tail bar. That's not the ideal scenario, but that doesn't mean it won't go lower. I just don't know what this is going to do, so it's really not of any interest to me. If it had closed weak, then it could set up a move lower. And so we can sort these like this to put them where we want them at, right at the top. Delta was going sideways, was above the 50, breaks down. Looks like it'll go lower, so I can put that on my interest list. Do we have another one? UAL, another airline, was going sideways, was above the 50, broke down. Clearly, these are topping patterns that suggest it's going to go lower. Let's see what else. Anything with the 200? Nope. Regaining the 200? Nope. So if we go to, let's take a look at technology. Nothing that was under the 200 and then regained it. What about breaking down? No, none of them. 50. No. Oh, here we got one. All right. Microchip. It's a semiconductor. Semiconductors have been doing well. This was above the 50. Green bar up. It was bought on the gap down. Another gap down, it was bought, and now it's closing below this consolidation. So the scan is looking for stocks that were above the 50 and now below. And when we click that, we then have to look at the pattern. What's the trend? What was doing it before? This one clearly is weakness, closing below not only the 50, but all of these bars that it was holding the 50, and this suggests it's going to go lower. Now, this is a strong sector. Go in here and sort semiconductors, you can see how strong it is. That one's showing relative weakness. You can see microchip here because this is sorted. Now, what about ones that maybe regained? Nothing. 200, nothing. All right, how about, since it's such a strong sector, bottoming tail bars? Nope. Topping tail bars, we have one. And strong coming out of a base. That's not bearish at all. Bullish 180s. Here's interesting. Right. Moving up was a red bar. And we've got two green bars on either side. That's suggesting would go higher. It isn't to some resistance, but it's a deep penetration into there. So that looks like potentially could go higher. And I can just throw this into a flagged minder. What a wide range bars, and that's in the wide range bar scan. This one, wide bar. So let's look at a different sector, something completely different. All right, healthcare. We've got a lot of bullish 180s. Not deep enough. There's the start of a turn, right? Was under the 200, and I was just touching the 200, but it closed under this base. Can it get back above? So we'll just set an alert. That could be a put spread candidate, and it's on an area of support. That could be a breakdown failure. What else? Home builders. No, that's not what we're looking for. Let's see. Loses the 50. No. Gains the 50. No. Bullish 180s. So we're not finding. Oh, here we go. Bearish 180s. No. No. So they're inside bars. This one, deep gap up there. So when that's bearish and it broke down here, it might go a bit lower, but just not interested because it's a bottoming pattern. There's one of our shock patterns. Now, this would be good for a call spread. Are there premiums up here because of this gap under this green bar? It's into the gap fill, so it's on support. It's not a short. So as we look at these different patterns, we got to decide what vehicle options, or it could be directional, just shorting the underlying or buying it if it was a bullish pattern, gives us an opportunity here. So this being on support, not interested in directional. It's kind of directionless, but based on that gap down, it should be good. Well, it will be good if we can find premium up here and when it expires. That's the simplicity of credit spreads. That's the essence of what we're looking for. You have to go and do some of the mining, right? Searching for what's doing well, what's doing poorly. Are there wide range bars like waste management here? And then wash, repeat. Bottoming tail bar. Here we go. A little sloppy, but look at this bottoming pattern. Sideways breakdown, deep retracement back up, closing above the pivots, pullback. That looks like it go higher. So once we know what patterns to look for, we can set up scans as to what we want the software to look for to put us in the ballpark. And once you become a member of Master Trader, either in the green room or one of the letters or one of the courses, we share these with you. We've got different layouts that share with you, gap layouts, and you won't be unable to find trade setups with all this. If anything, you'll find too many. And then knowing how to do it, to deal with them, is the key. If you have questions, email me, Greg at Master Trader.